Welcome back to America's Commercial Real Estate Show. I'm Michael Bull. This segment is brought to you by CommercialAgentSuccess.com. If you are a commercial real estate agent, you deserve to check it out. CommercialAgentSuccess.com training. Well, today we're talking about crowdfunding. We're looking at it from the sponsor's view. We're going to talk about it a little bit from the investor side. And this is a rather unique show. We're not just talking about crowdfunding. We're talking with people who are actually doing it, with the sponsors doing it. My guests are Darren Powderly. He's co-founder with CrowdStreet, and he's with us on video here. Then we have Bob Peterson with us. He's chairman with Carter. They've been doing developments around the Southeast and around Atlanta for 61 years. They just did a successful project last year, and that we're raising money through the crowd, through Darren's company, CrowdStreet. And Bob, now that you've done it, you've had success on what is considered a small raise and project for you guys. Are you going to do it again?
Yeah, we're doing it right now.
Okay.
So we have a commercial retail project that's really an adaptive reuse, where we are at a project called, we really call this phase of the project Georgia Avenue, and it's 48,000 square feet of primarily restaurant and some commercial space and some office space that we began construction on about a year and a half ago in terms of renovation and lease up. We're pretty much 100% leased. With including LOIs, and we are starting in January a second phase of that, another 10,000 square feet. So in total, the capital we're raising is for a 48,000 square foot project of about $20 million. We have a bank loan from BB&T that's in place now that will be increased for the new development, which is committed. And so we are looking to raise $6 million through the crowdfunding platform for our remaining capital required for equity for that deal.
And it's kind of an interesting project in that it's part of, if any of you from been in Atlanta, you remember the old Turner Field, I guess was part of the Olympics, right, in '96, and part of that is Georgia State's involved there now, and you guys bought this, how many acres, and tell us a little bit about this entire project, because if you drive through Atlanta, 75, 85, you look over, it's right there.
Right. Yes, it's very exciting, and that's a big part of it. The Georgia Avenue property is really just a major phase where we're creating experiential retail, overused term maybe, but very, very important, and it's already been very well received with some very successful restaurants. But the whole project for us is 35 acres. We have opened another developer, Aspen Heights, opened a 70 million, 675 bed student housing project in our neighborhood. 100% pre-leased in August of this year. We have 312 apartment units underway, which will open in about 18 months. We have a major grocer LOI that's moving into the neighborhood. There are two other competitive developers less than a half a mile away doing multifamily projects. One's under construction, one will start in the spring. There's 100 townhomes priced from $300,000 to $700,000 underway right next door to our retail property. Nice. And so all of this has happened just in the last few years. Our property's 8 minutes from the airport, 1 mile from Georgia State University, and of course Georgia State has renovated the former Braves Stadium to be their home football field. So
yeah, and this is in the heart of Atlanta, really. I mean, It's incredible, and it's interesting that the individual investors can invest in a project like this that's in the middle of all this kind of redevelopment and what a great area to be in. And Darren, when individual investors are out there and they're looking at different platforms and different online places to invest in commercial real estate, what are a couple tips that you could provide for them? Something maybe things to watch out for, maybe.
Well, the Carter Summerhill project is a great example of individual investors, whether you're in Atlanta or you're in Portland, Oregon, or San Francisco, anywhere. If you like the demographics of the Atlanta market and you like the idea of, gentrification happening in a great part of the city, with big developers, combining forces, as Bob just described, to really revitalize an area that needed revitalization. To participate in that is something that's really unique. There's multiple reasons. Number one is the economics. For most of us, some of us might be more motivated by the gentrification to invest in your city. Most of us are actually more motivated by the actual economics. It was nearly impossible to participate in a project like Summerhill with Carter as an individual investor with a $25,000 check. And so I think the access to that opportunity is number one. Number two.
And how small of an amount can someone invest in a project like that through CrowdStreet?
$25,000.
It's a minimum. Okay.
Yeah, $25,000 is the minimum. The average ticket size that we experience is $50,000. And there's no cap in terms of the amount that you could invest.
And what are the returns these investors might think about?
Well, Bob, what are the returns that we're projecting? So all returns are projections, and the Summerhill project in particular, I can bring it up right now because I have a different screen on. But overall, throughout the platform, I would say that the average returns, again, we're talking about big institutional quality commercial real estate, and there's the large majority have in-place income. These are mostly value-add type of projects, but not all. We have some development projects as well where there's no, current cash yield, and it's more of an IRR-driven return. But a good portion of them have existing cash flow, and let's call that 5 to 7% of current cash yield, with an on-target total return, or an IRR in the industry as it's called, projected in the mid-teens, right? So you might get 5% cash flow today and a 15% return 5 years from now when the project is fully sold or realized or refinanced. Those are some average return projections that we see, across the nation.
So I assume an investor, if they're selling a property, can't 1031 into a project like this through you? Can they use it as part of a replacement property?
So these are LLCs. These are businesses that invest in the real estate. So they're partnerships, and that's right. They're not open or applicable to 1031 exchanges. I will say that there are certain or select sponsors on the CrowdStreet marketplace that structure their offerings as DSTs or even TICs, which of course are designed for the 1031 exchange investors. So if there's an investor listening right now and they are coming up in a 1031 exchange, we can certainly accommodate that either with a live offering on the marketplace or through some of our sponsors that are continuously opening.
I'm with you. So Darren, back to the tips for investors that are maybe just online at various crowdfunding opportunities out there. Should they understand the project they're going into, the market? Should they understand the sponsor? Should they understand the actual company like you guys and how you work and kind of what background there is there?
Absolutely. Whenever an investor is considering a private offering or a private equity real estate deal, understanding the sponsor and the sponsor track record is first and foremost of importance because that's who's going to have the fiduciary duties to be responsible for your capital and also put that capital to work in the most efficient, effective manner. They're the ones executing on the business plan. As an individual investor, most often passive, no voting rights and so forth. So the sponsor, quality is first and foremost importance. Secondly, looking at the property and understanding everything from, the building or the development plans to the neighborhood, to the trends, to the competition. Some of the things that are really fascinating about this Carter Summerhill project, the property itself, in this case, an experiential retail, multiple buildings during a certain street, which we've seen in cities like Denver, like Larimer Square, hopping, really high energy and successful stretch of experiential retail. We see that all over the nation, despite the streaming of Netflix and shopping on Amazon. People need to get out. So looking at the property and the details there is secondly most important. Third, look at the investment structure. the returns on investment, how, the difference between the property level returns and the net to investor level returns. And there's, of course, some very legitimate costs involved in that spread, and the sponsor needs to make money as well. But that's important to understand. How many fees are involved there? Are they in the range of acceptability? Who's got prioritization? Where in the capital stack are you? Are you looking at a mezzanine opportunity, a preferred equity, or common equity? And getting educated about those key terms and seeking, advice or guidance from others who may be more experts in that. I would say that those are the three things that individual investors need to look out for, above and beyond. A lot of details below that, of course, Michael, but those are big.
What about liquidity for these individual investors? Is there any liquidity there at all? I mean, they're just waiting.
It's limited. Yeah, it's very limited in real estate, period. Online, offline, liquidity is limited, right? And there's transaction costs. If you were to just rent a house in your hometown, there's, of course, liquidity available possibly by putting it up for sale and incurring probably 3 to 5% of transaction costs. And you have to have a willing buyer, of course. In real estate, liquidity is a problem. It's probably pretty similar with online investing. You're also a passive investor, and so it's up to the sponsor to decide, are they going to sell early? Are they going to be selling at the, say, 5-year time frame when they're projected and advertised in their offering materials? Or do they need to extend the ownership to maybe it's a bad time to sell real estate because we're in a recession 5 years from now? Those are certain things that, again, back to the sponsor quality and the fiduciary responsibility that they have. We are exploring a secondary market. There are other companies that would want to buy shares of an individual investor's holdings. If I had $50,000 and I needed to get that money out, there are vehicles and ways, and I think we're going to see more of that in the future. I can tip my hat to where the industry is going, so that individual investors can kind of sell and buy shares almost in a similar format that we can buy and sell public securities on the New York Stock Exchange. Yeah,
that's very interesting. And so I do get calls from investors who have a limited piece in a project, and they're looking to get out. And of course, as brokers who sell large properties, that's not that exciting to us. We don't have a platform in that to do that, and it's kind of too small for us. So it's interesting market. Well, back to the sponsor side, the developer side, Bob. Was there anything that again, you guys didn't have to do this. You guys have been around forever. You could raise equity from institutional or limited partners anywhere. You decided to try it. Was there anything that kind of surprised you about the process or the outcome or anything?
Well, I think the biggest surprise was how successful it was, and how rapidly the capital was raised. Again, we had let's say checked out the CrowdStreet crowd, and we had some confidence early on, some sort of faith in the process, and it's been delivered. So the technology's worked well. We've our accounting department and management department, it's all worked quite well. So we're really looking forward to this January offering, and just assuming it goes just as well. So we'll see.
I bet it will. And what would be a kind of a final tip to a sponsor out there that might be considering crowdfunding?
Now you're talking about my competitors, so I don't want them to get.
Don't do it.
No, never mind. Yeah, it's not that great. Sorry, Darren. But no, I just think, seriously, I think for certain property types, it's a great way to go. I think Darren has highlighted the advantages to the sponsor as well. Look, we love our private equity limited partners, but they are the heavyweight, and sometimes they wield their weight in terms of timing of sale, and maybe it's not best for the property, but it's best for the. We hadn't experienced this much, particularly in this environment. Yeah. But I have seen times in my career where we were either selling or not selling, regardless of the real estate. Let's put it that way. And that can happen from time to time. Sure. We all know that.
Sure, and I think that's a really big benefit of using the crowd. And Darren, parting tips for maybe sponsors out there or investors?
I would just highlight a few things for sponsors, real estate developers. Is one to just understanding that this trend of online real estate investing, or in their case fundraising, right? Online fundraising for their projects and developments is already proven. It's 5, 6, 7 years proven now. Again, it started in 2012. And we're moving from a period of the early adopters, investors like the power user investor, really a do-it-yourself, independently minded person. The same people that opened Charles Schwab accounts online in like 1996 are the ones who have been investing online in real estate from 2014 to, say, last year. But last year we started to see an audience open up, more of like a mass audience of investors. That's where the 73,000 people come from. And I think what developers and sponsors need to understand is that now it's scaling rapidly. The amount of money, and it's intelligent investors who are investing real dollars, and the amount of money that they can raise online, through various platforms is, instead of $1 to $2 million, we're talking $5, $10, $25 million. 3 weeks ago, we raised $30 million on a project in 24 hours. $20 million of that $30 million came in 20 minutes. I mean, it is mind-blowing to us as well. It's awesome. Fascinating to see the trend, and it really still is very early days. So there could be a time in the future that we forecast where there's $50 million on a per project basis. So if you haven't learned about it yet, I would say that just seek to understand what's happening in online real estate fundraising for common and preferred equity for your projects, because it could be a nice alternative and enable you to do projects that you otherwise may have difficulty to find the equity for.
Yeah. Well, that's awesome. Great information. Darren, thanks for joining us. Thanks for being on the show. Bob, thank you for being on the show. Appreciate you coming to Studio One. And if you'd like more information from Darren's company, their website is CrowdStreet.com. If you'd like to look at some of Carter's projects, their website's CarterUSA.com. Well, thank you for being with us. Please let us know what you think. We appreciate you sharing the show and connecting with us on your favorite social media. Until next week, be sure that you always lead, learn, and laugh, and join us for America's Commercial Real Estate Show. America's Commercial Real Estate Show is brought to you by Bull Realty. For customized asset and occupancy solutions, visit bullrealty.com. Commercial Agent Success Strategies. Incredible training for commercial agents. Visit commercialagentsuccess.com.